FDIC and the Fed, and then the Fed did its own release. So, a lot of moving parts is what do they really, let's see. Where is it going to go here? Don't know.
Well, now you're just parked here in the indices. You're not going to know for a week and a half.
Well, May, and you have the expiration, or what do we
It's
call
over
that?
with.
Quadruple, whatever.
Yeah, it's over.
Okay.
I mean, they're gonna play an options game late this afternoon. I think it's totally irrelevant.
Okay.
So, and you got, the NASDAQ unchanged on the year, basically right here.
Yeah.
And so, I am not the faintest idea which way what I want to do with it here.
Nope. No, I can listen. It's so now if the banks are not going to be buying as much treasury, so will that make more money available into the stock market? There's a massive amount of reserves that are going to be floating around the system. Well, they'll be parked at the Fed, of course, but where will they seek to go? Again, we have more questions than we have answers, and a lot of that is due to the Fed. And Powell has an op-ed in the Wall Street Journal today, which for the life of me, when I read it, why would you bother with that? And I still raised the question: do the regulators, meaning OCC, FDIC, and the Fed, do they fear Senator Warren and Brown? Because if you go back to the Powell testimony, they got out in front of this, warning about extending the regulatory relief on the SLR. And I'm wondering, and Zoltan Pozar, said on Wednesday that he thought that the increase in the from 30 to 80 billion in the repo was in anticipation of this, that it was done to offset it, and it would help, as he called, foam the runway. So, again, a lot of considerations out there, and more answers and questions at this point in time.
Yeah. Well, right now, all they're doing is buying the Russell and all the crypto stuff again. So
yeah, well, you know what?
They're going to push the stuff that's
search out, and right? You see the S&Ps come back pretty good.
So we were kind of looking for that yesterday, but then I thought they were going to trap everybody in front of 3,900. So now you got the flush today.
Well, the market, to me, had the news that this was coming, and I think they sold off. Now let's see how rapidly they can rally back, because I can look at across, and you can see it with the way the platinum acted late yesterday, gold, silver for last year. There's been some tells, but again, more questions than answers. And we still are left with the question that I have put forth for quite a while now, going back to the podcast with Louis Gavet. Where will the break point be here? Does the Fed, or maybe there is none, but if there is none, then does the market have a level in mind? And I was raising this issue, of course, in the podcast. And
that was a great podcast.
You know what? I really thought it was good. Thank you.
No, it was more than good. I mean, it was unbelievably good.
I listened to it last night, and as we were doing it, you get a sense, and he was really good, really good.
Yeah, I mean, I think that was one of the best things that you guys have ever done. And I listened to it as soon as Richard sent it to me.
Yeah, he was really good.
And that was longer than the ones you usually do too.
Yeah, well, Richard kind of just let it go. And okay, I thought that was smart to let it go because we were onto some good things and we really got, and he's really a respected, he has a pretty big following globally. And the fact that it comes out of Europe makes it that more interesting. We spent a lot of time on Europe, so um, it was good. It was very interesting to sit with him and get that stuff discussed. And I think it's important. The Fed cannot be given a free ride here, and they're not right now. The market, it's not. But again, if they understood markets, they would say that they're looking at this, especially now. This actually gives the closing of that regulatory loophole on the SLR does give the Fed cover to go to YCC now, or at least say they will be there to extend duration if the market needs it. That's all they'd have to say. Don't have to say anymore.
Yeah, well, Russell value, all the value indices are all starting to get a bid here. Yeah, it should be interesting to see what they do. I mean, the bonds certainly didn't rally anywhere.
Nope.
They can't, and I sent you that really long-term chart. I'm going to throw it up here just so people can get a sense of where we really are. And when you go back, if you just look at this, we're kind of in the middle of the last 40 years.
Wait, let me get on your page. Hold on. Gotta get on. Let's see. Let me go to your. Let me open up full. Okay.
So, I looked at author's thing, but I wanted to expand it more. And you look at just this 40-year channel line.
Yeah.
That was at anomaly. And you've had a couple of them and big sell-offs. The question is now, are we going to get another 8 to 10 figures down to the bottom of the channel line now?
Well, but that's the bond futures we're looking at, right?
Yeah, that's the bond futures. I mean, I can throw it up in the yield.
Yeah, I think and as I'm putting out there and I'm trying to get some people to do the work before I head to do it. To find out, looking at the 10-year over the last 50 years, what's been the average real yield, not nominal yield, real yield? Because that's where I think the market has to take itself to if the Fed is not going to prevent it.
Okay, so here's the 10-year. Why isn't it giving it? Oh, hold on. Okay, so if you look at this, what's that balance line right there? It's 182.
Is the yield?
That's where the momentum number is at 182 on this thing, 1.82%. So we're trading at 1.7.
Well, yeah, right. Because you're taking this back and looking at it from, let's say, of course, certainly 2008 to the present.
Yeah. So this is going back to 1962.
Yeah.
So the real channel is from 80.
Yeah, which is unbelievable.
Yeah. So here, if we just take the short channel, and I'm not sure that's going to be a good channel. You know, it's trying to come back to the top of it and out of it in the 10-year. So it still needs about probably 1.8 to convince people that it's coming out of here.
Okay.
Here, I'm going to send that to you. And that's an annual chart. So that's, well, let's just play with this a second. And let's just take it down some time frames to see if we can get any more clarity on it. You know, the semi-annual looks to be like 2.25, 230.
Okay, but you know, but these are nominal yields, and that's
Okay. And so you need the real yield. So what?
yeah, yeah.
So
I'm
you
gonna
got to
go
get a
dig.
Bloomberg for that, right?
Yeah, I'm gonna go dig on that for a little bit. Now, you know, I don't have the Bloomberg, but I know, and I'm not Alex, but I'm gonna go to Praxis, see what these guys. I'm gonna pose that question. Let me see if I can. I'll leave my. I'm gonna mute myself, but I'll be listening. But let me go see what I'm gonna. Now I gotta do the work.
Okay.